Old Mutual Retirement Monitor for 2012 suggests that despite increasing financial pressure from the recent financial crisis, many South Africans are showing improved levels of savings for retirement. Hugh Hacking, Head of Retirement Fund Solutions at Old Mutual, joins us in studio to shed some light on the results. I'm going to jump straight through, Hugh, to the results. A couple of these, in terms of your respondents, 33% of respondents own a retirement annuity, and that's up from 24% of respondents in 2011, which is a big jump.
That's a big jump.
And then approximately 58% of respondents belong to a pension or provident fund, and that's an increase up from 51%.
Well, that particular response, we actually select people based on whether they're members or not members. And so it happens that, not everybody that we select then is a member or isn't a member. So we do try and get it half-half. More members have retirement annuities than non-members have retirement annuities. And so we're seeing a trend where people that are members of funds are looking to top up as well. And also, obviously, the higher rate of retirement fund members in the survey would also push up the retirement annuity rate too.
So if you look at what's happening in the industry, there's a greater awareness, would you say, of the need to save for retirement. Is that translating into action?
Well, that's an interesting question, of course. So what the survey shows us very clearly is that South Africans are becoming more aware about the need to prepare for retirement. And it comes through in a number of areas in the survey where people are more sure about how much they've got, whether they're well prepared or not, whether they'll be short or not. But we are still seeing that there's a lot of pressure on people to actually put money away for long-term savings. So people will change jobs, take the money out, use it for short-term needs, settle debt.
Buy a new car.
In fact, right now it's actually less luxurious than that. It's very much more things that people need to survive almost.
Necessities.
Necessities, yes. So we are seeing people doing that, and that's putting a lot of pressure on people. And we're seeing a shift then as well away from longer term savings vehicles to shorter term needs-based savings or financial expenditure. Funeral-based products, medical cover, that sort of thing.
Yeah, I noticed in the press release as well that the percentage of people who actually know who the trustees of their pension fund and the administrators themselves is very few. What do you think is a quick checklist for pension fund investors to make sure that they are covering the basics in terms of knowing well, you can go through it.
The number one issue to ask yourself is, am I saving enough?
Okay.
So a lot of people ask, how much should I have at the end of the day? Actually, the number at the end of the day is very difficult to influence when you get there. So you actually have to think well before you know what that number should be about saving. And that's actually the key lever that a normal person can influence, is how much am I putting away? Investment returns, very difficult to predict. What's going to happen in your future, very difficult to predict. The one thing that you can influence is how much you're saving today. And that's what people really should focus on.
Are we seeing broader awareness campaigns, the likes of Old Mutual, Sanlam, championing that space to really drive this message home?
Yes, I think there is definitely an increase in that. So certainly at Old Mutual, we have now what we call our financial wellbeing program, which we make available free of charge to our corporate clients and their employees. And that teaches people basic financial skills. And other companies are doing similar things as well. I also think that it would be useful if potentially the education system were to contemplate a greater amount of education about saving in particular, and the ability to save.
Absolutely, create that awareness right from school
One of the
level.
things that South Africans have realized is that you cannot create wealth without education. The one piece that people are missing at this point is that education is the one pillar of creating wealth and long-term financial security. The other pillar is saving. And so you need both education and saving to do that. And it's only once you start saving that you create your own financial future and potentially intergenerational transfer of wealth for your children.
Key to the retirement story is, of course, diversification, especially in this very volatile, uncertain environment. You do that for obviously clients that come to you. What is your outlook at the moment, given the volatility out there? And excuse me.
What does my crystal ball say?
Your crystal ball.
My crystal ball says that you have to be careful, and that really diversification is the answer for most people, because it is so hard to tell. I mean, just now Kobus, when he was talking as well, it's, really...
You don't want to put all your money into Anglo-American.
Well, absolutely. You don't really want to put all your money in any particular one thing, because at the end of the day, most people that are saving for retirement are not investment experts. So what you want to do is you want to make sure that you're in a good, diversified portfolio that is able to be fairly well protected against different asset class movements. And I really think that that, for most people, is the right answer. And particularly if you consider that these are long-term savings that we're talking about. So you're not talking about something that at the end of the year you want to see a return. You're talking about something that in 30 years' time or 20 years' time you want to see a return. And really the only way of doing that is to have multiple asset classes.
Kevin, are you seeing a broader awareness among your clients?
We are. Do you know what's interesting? I think South African investors and African investors are looking at the news flow from US and Europe, and they're looking at the welfare state that was set up after the Second World War, and which actually has been a very large financial experiment to see whether society could sustain its broader society in that way. And they're seeing retirement ages being pushed up and retirement benefits being lowered. Yes. And I think what we're seeing in our client base is where we haven't necessarily had that guarantee of welfare, our clients are looking at things and going, well, then I need to be more proactive in providing for myself. And so the news flow from Europe, I think, is changing some of the attitude in South Africa in terms of providing for their future.
Short term, do you think we're going to see a big increase on these numbers when you next come to fruition with the report?
Realistically, probably not, because I think that the economic pressures are here right now. So the full impact of the economic crisis is probably really only starting to settle on a lot of normal South Africans' pockets, because people's salaries and working has been depressed, but prices have continued to go up. And so these cycles move quite slowly. So the markets react quite quickly, but actually the economic cycles move much more slowly. So we'll probably see that the recovery in people's ability to actually have sufficient depth in their pockets to save more will take some time.